Economic growth and what happens to interest rates are two things that are usually of interest to most people. We're going to have a look at the different factors that influence those two things and break it down in a little bit more detail. So starting with inflation, oil is one of the major influences of our inflation rate because most things have to be transported and therefore the oil price influences the fuel price. So this graph just has a look back, and you can see that back in 2008 the oil price went up over $120 a barrel, peaked in 2022 again with all the crises, geopolitical things that were happening in 2022, but has been coming down quite steadily, coming down to close to $60 a barrel. Last night Israel attacked Iran, and the uncertainty of what that could do to oil supply saw the oil price spike by 5% today. An oil price of around $60 a barrel is quite attractive from an inflation point of view in South Africa. This spike that we saw yesterday could be a short-term thing just until we see how the tensions between those nations are handled, but we'll have to wait and see as to what that does to the oil price longer term. This graph just shows how the South African currency has moved relative to other currencies around the world, and we can see having strengthened by 6% so far year to date, and this was up to the 9th of June, was pretty much in line with most other emerging market currencies. But to give you an idea, on the 9th of June, the rand was trading at 17.74 to the US dollar. In April, at one stage, it was almost $2 worse at 19.75 at one point during the trade tensions with the US. So we've seen some good strengthening happening since then. If we have a look at our bond market, which is what foreign investors could be attracted to, we can see in this slide that the South African bond market is the second most attractive, only behind Brazil, in the world at the moment. Our yields on our bonds, if we subtract inflation, that's the purple line, are trading at really attractive yields. And this could be further impetus for the rand to strengthen as foreign investors put money into our bond market. One of the main things that is on the mind of our Reserve Bank officials when they decide on what to do with interest rates is what's happening with inflation. And this slide just shows you that inflation has been coming down. The green highlighted area is just showing whether the band that the Reserve Bank is targeting between 3 and 6%. And that has actually come down now to below 3% at the last count. And that was one of the reasons why there was a 0.25% cut. One of the members of the committee actually voted for a 0.5% cut, but it was set at 0.25. So South Africa's GDP, or its economic growth, is not high enough. We are not growing fast enough. This slide just shows the latest figures, which basically in the first quarter of 2025, the South African economy only grew at 0.1%. quarter on quarter. The fourth quarter of last year, we only grew at 0.4%. So there's not enough economic growth in South Africa, and this is one of the things that the government needs to really find ways of stimulating our economic growth. And the Reserve Bank could potentially help this somewhat, but it's not entirely up to them, by keeping interest rates lower so less interest is paid by businesses and individuals. So this slide just shows how we've seen a structural decline in economic growth in South Africa over the last number of years. At the moment, with economic growth just above 1%, is really not enough growth as to what South Africa needs, particularly to create jobs. The three main things that the Reserve Bank needs to support lower interest rates, which should help economic growth, are oil prices to stay low, although that's not something we necessarily have full control over. We need a stronger rand, and we need lower inflation, and lower inflation in fact will also create a stronger rand. But a stronger rand will probably, the biggest thing the government could do is to create policies that attract investment, something that we haven't seen much of in the last number of years. So this graph just shows you the GDP, or economic growth, that we've seen from 2010 up until 2024, and then forecasts for the next 3 years, and we can see there at the moment those forecasts only getting up to 1.8%. South Africa has got a lot more economic growth in it than it's currently delivering, but it needs some structural changes. It needs to be attracting investment both from overseas and from local companies. At the moment, there's far too many local companies who are sitting on a lot of cash but are not investing those because of uncertainty. So as soon as there is more certainty around how South Africa is being run, we should see those cash piles being deployed, which will help economic growth. If you have any specific topics you'd like us to cover, please leave them in the comments below. We'd love to share our insights with you on anything that may be of more interest.